So what you see is I've gone straight up here and I've put the buy stop at 14s. So 14s is here, right on these levels, to kind of get flicked in as we push up. And as we're coming into the level, you think once this goes, you don't want to see it really back below. Give it 15 ticks, 15 points of risk really. Back down here below this 12,300, you don't want to see it come back. It should be a quick move through and then not look back. So let me just move this at the same time. So as you can see, we're coming up to the level. You'll see once it flicks me in, it pauses for a second. Straight away, I'm now hovering to get out if it comes back. Because you don't want to see it hang around here. And then you get that straight push up. You can see this is where we leave these kind of imbalances here. And we get into this kind of area where we start to get some volume. Around these 30s, you can see into here. Sit back. And then this is the key for me now. Now you're on side, you don't want to see it come back through the level. It should be a straight squeeze. And you're looking for now just to lean. You see it keeps going off the screen, it comes back into the 40s. Just to lean on these areas, and you see it now, we start to build some volume. And I've done this so many times where I jump out here, you know, it stalls and it comes out, but really you're playing for this big squeeze, and with the volatility that's going on, it should be a lot more than this move that we've had already. So then you're looking for now it to hold in these volume areas and keep these low volume areas below. Build some volume like this and push again. You'll see it going off my chart is when I'm trying to mark some levels as it keeps going on my, so it goes off my ladder. I'm trying to mark some levels. So I put a stop in at a scratch. I don't want to see it back, and now it's just kind of managing it. That's just kind of a disaster stop in case something comes out. But yeah, as you can see, as we push up again, we'll keep following it on the footprint. There's always leaving these low volume areas all the way through, building a little bit of volume, pushing again. You get these pullbacks. It's that one that I've said before, where you get this sell back down and it's absorbed by buyers. So it's buyers moving up the bids, and it can allow for that continuation. You see it goes a bit, comes back. I don't know, this is a topper move. We've really jumped this one. One sec. There we are. Right, so we're in these 60s. This is very slow. You see we build the volume around the 60s. Again, that's another example of when you get this red up here and we close above. The buyers and the bids are absorbing higher up as people need to get filled. What you'll see is every rotation on this is just straight lining. So it's never really put you under pressure apart from that few seconds at the start. And then it's just straight bid. What I'm going to do, because this does go on for like 30 minutes, actually, we'll leave the footprint off until I move my S&P ladder, because what we want to see as well is there's the vol stop in the S&P. And do is put this on 2 times the speed now to get through, because it does just churn its way up all the way. You see now we're still in these 60s, just building some volume back up. But it's never really pulling back far, it's just stopping, building a bit of volume, push again, build a bit of volume, as if it was a trend day, but if you just looked at the move up. So what you want to see as well, while this is getting off the page in a sec, hopefully I'll recenter it in time. It's the S&P, I've got it on MES at the minute, I don't know if it does do the vol stop, because I was trying to scale in, use it to scale in some positions. You see, as this Nasdaq's pushing back up, the S&P is now really driving as well. So just see on this S&P, well, MES on this one, if it will do vol stop in a sec. You see, as the Nasdaq pushes up, Dow's the lagger, but the S&P is getting dragged back up with it. And yeah, they're having these rotations down, but not too much. Right, so I've moved it onto fully yes now. So you watch this 4,000 here. And we get a vol stop as we go through. Let's see if I can put it down to 1 times the speed. There. So you see that's a vol stopped, fully vol stopped as we've gone through. Someone's just hit market. You know, showing people need to get out of this. Remove it back one more time so we can see it. So as we come through now, there, straight vol stop in the S&P. It has to renet, but you see in the Nasdaq it's still pushing, and we kind of leave that then. It's kind of a massive imbalance kind of area, and we don't really come back to it. So yeah, that was that through the S&P. Still, you're in this Nasdaq, and you're just kind of following it and watching it up. We'll go back on 2 times the speed, maybe 1.5 actually. So now, hopefully I'll bring the S&P over in a sec. So now we're at the 420s. So we're into here again, and you can see we leave this low volume area below us, down at these 80s. Through 400 we get a bit. And then we start to build some volume again. So as long as you're seeing this, there's no reason for me to be getting out until we start to break back down. I see a proper delta reversal. Or, yeah, we break back through the volume and through some low volume. As long as we keep holding this, it's okay. So, right, so now we've got the S&P back in as well. So we can watch them together. You see that we're into the 20s. Into the 15s. This is when we're stuck in here at the minute. What I might do, instead of just watching this flick about, let's just skip it. 27s. So yeah, anyway, we keep doing that all the way up. Then we stall a bit for the first time. Then push again into these 50s. It's off my screen. 67. So you can see now, even when I'm skipping it 49 times as well, it's starting to slow down, like the pace of the move up. You know, we're not covering as much ground as quick anymore. We're starting to get a bit of selling come in. So once you can see how long this is, like 20 minutes now into it, and we're still in the same area. Right. So then, obviously, your next level now you're looking at is 12,500 is a big area. And what we'll see is once we get to here is when we first then start to stall. We start to come back and trade back down. We come all the way back to these 64s, and this is where you start to know you can let a lot come back if you go, okay, well, I'm not wrong till back down here. This is where I'm just kind of trailing it on this 1 time frame on the 5-minute auctions and using these volume blocks to stay in the trade. And you've been in it now 20 minutes, and it's 20, 25 minutes. And it's just done a straight line on you. It's just every price has just gone bid, and there's been no pullback. And you know there's probably going to be one coming at some point. Is how you can try and, for me, stay in the trade to maximize your upside. But so yeah, stay in the trade to maximize your upside, but don't let too much of your P&L come back, because it did in the end actually turn and come pretty much all the way back to these levels. But also, on the other, you don't want to be too tight and get yourself ticked out before it might do another 100 points. So for me now, this is it. When we get into this area, you've basically done 200 points in a straight line. It's the first time we start to see these big rotations back. So yeah, don't get sucked in too fast in this volatility and miss the main move. Lean on the correlations. How are the three moving? Which is the leader? Which is the lagger? Which is the strongest? Which is the weakest? That's something I've kind of really picked up on since seeing this more. Give you a bit more conviction on your trade and make sure you're in the stronger market if you're playing like a buy side reversal, or the weaker market if you're playing a sell side maybe. And then last of all, I've kind of gone on it a bit, but with this volatility, you need to be able to give the trade some breathing room. And I've done this with trades before where I've thought, if it's volatile and I get a bit more size away, if it goes right, I'm going to make a load of money. And it's a wrong way to think, because the second it's going 5 handles offside, 6 handles offside, maybe 10 handles offside, you're sitting there going, my day is done if this gets stopped out. When I'd had no shame in like going, you know what, instead of trying to get 2 SPU away, I'll go to the micros and use clips of 10 or 5, so I can scale in and scale out, or instead of having just one S&P, just to give myself that ability to scale in, scale out, and build a position as if you were trading large size on ES, just to be able to manage your risk better. And I don't think there's any shame in that when it's more volatile, because I wouldn't have held the move. There was another trade I took on the S&P the end of last week and Monday this week, where I took 60 points, 50, 60 points out of the S&P, but I did it because I took it on the micros and built a position, not as big as I wanted because it went without me, but it gave me the ability to scale some out, not be stressed as it's pulling back a bit and let it go again. So I think when you've got this volatility, there's no shame in using the micros to be able to build a position, keeping within your risk parameters. And you don't want to be going guns blaze on one trade and stopping out and your day's done, because you might miss a good move. So it just gives you that ability to be a bit more flexible. And yeah, from my point of view, as long as you're not over trading the micros, there's no shame in that, and it can help you actually make more money, being able to scale in, scale out, not be going over your risk or getting psychological problems from panicking when you're offside with bigger size. So yeah, because it allows you then, as I've said, to take the trade as you should, instead of thinking about how much you don't want to lose on this trade and being too tight.